Wow, welcome. Thank you so much to Decasonic, to Bridge Alternatives, to Sterling Bay, to the incredible team behind putting this effort together. Chicago is my hometown. I'm here from the Bay Area, and I am just so proud to be part of a community that is building, cultivating, celebrating the innovation and opportunity that Chicago represents, so thank you. We just got out of a panel about leadership in Web3, and I'm really honored to moderate a conversation with three incredible leaders in Web3 that come from really diverse backgrounds. So we've got Adam Jackson from BrainTrust, we've got Laura Cunningham from Near, and Rebecca Allen from Contented. There's a lot of diversity on this stage: San Francisco, New York, London. So really excited to bring their unique perspectives to this conversation. Let's start out. I've noticed one of the biggest issues in fundraising is actually being able to describe what the blockchain is and the utility that it creates, and to be able to do that in terms that resonate with a non-crypto native audience. And so I know we have a lot of people who have been in crypto for a long time in this room, and we have some people who are potentially a little bit newer to the space. So I thought we would break the ice with each member of our panel kind of sharing their name, but then also what is the value proposition of the blockchain in how you particular are building it. So let's start with you, Adam. Tell me a little bit about BrainTrust.
Sure. Hey everybody, Adam Jackson, co-founder of BrainTrust. For me, blockchain tech is meant to disintermediate companies or middlemen or whatever who are extracting more value than they provide. So I always look at like marketplaces, like internet-enabled marketplaces. There's on a spectrum. They provide as much or more value, all the way over to they extract way more value than they provide. Quick examples like Airbnb, I think a good example of a marketplace that provides as much or more value for the fee. There's not a high incentive to disintermediate them because you get so much from that platform. On the other end of the spectrum, you could look at like staffing firms like Deloitte or McKinsey that mark up talent 200%, or firms like DoorDash that mark up food and don't pay dashers and charge lots of fees and aren't providing as much value as they. So blockchain based, or what we call Web3 or user-owned networks, can take that value extracted by the middlemen and give it back to the participants of the marketplace.
Great, thank you. And that's a helpful kind of foundational explanation. Can you also explain what you're building at BrainTrust?
Yeah, so BrainTrust is the user-owned McKinsey or user-owned Deloitte. It is a talent marketplace that connects knowledge workers with clients that need them. And instead of Bank of America paying Deloitte for Java developers and paying a 150% markup, which is a real thing that actually happens, Bank of America can go to BrainTrust and pay a 10% markup. And so the economics are better for B of A, the economics are better for the developer, the designer, product manager, and it's just not better for the old intermediary. And so BrainTrust, we're about 4 years in now, doing over 100 million a year in GSV. That is clients, usually Fortune 1000 clients, hiring talent. And because BrainTrust is not a for-profit company, it's like Ethereum, it's a user-owned network, the economics are better for everybody involved.
Great. So if anybody ever asks you the question, is the blockchain creating any utility? We've got 100 million in gross service value on BrainTrust alone. So the answer is absolutely. And I think that's a great first use case to start with. Laura, I'd love to go to you. What is the utility of the blockchain and how is it coming to life at Near? What's the role that you're playing as layer one?
Yeah, amazing. Hi, everyone. I'm Laura Cunningham. I work at the Near Foundation. I actually built and lead Near Horizon, which is a startup support platform, basically, really focused on 0 to 1 early stage founders. And it's both a community of learners, and then it is also a marketplace where founders can find support that they need. And so being part of a layer one, really our central customers are builders, right? It's the developer. And so what we do is we're providing the infrastructure for all of these really disruptive models and for creating new markets and new ways of thinking about ownership. And the thing that really attracted me to working at Near and actually just in this space is when I look around, I see there being the need for so much disruption when it comes to personal power and ownership. I think that's largely at the root of what so much is happening in terms of political polarization, issues around nationalism. I think it's people feel out of control of their lives. And I think that blockchain gives people back control of their identity, their data, their assets. And so as a layer one, what we're doing is we're creating the infrastructure, right, to the tooling to allow people to take advantage and employ those models that really disrupt society.
Excellent. So you can't actually have an application like what BrainTrust is providing, and soon you'll hear from Rebecca as well, without the infrastructure underlying it. And that is the role that NEAR is playing. It's incredibly foundational and really important. Rebecca, let's go to you. Tell me a little bit about the utility of the blockchain and how you're bringing it to life with Contented.
Sure. So Rebecca from Contented, CEO. We're actually built on NEAR. Thank you. We got a grant from them last year. And we are basically building an ecosystem to help global brands find the most impactful content at speed and scale. The advantage to the blockchain is that, the Web2 environment for content creation, a business I've been in for a long, long time in different guises, is very clunky, it's very expensive, there's a lot of middlemen that are kind of taking a lot of fat. And so the blockchain allows a lot of back office automation to really cut out that middle layer and bring speed and scale to operations really, really easily. The other advantage on the creator side of things is smart contracts really gives them ability to prove provenance and have reassurance of not being ripped off by the content being taken and used elsewhere. Smart contracts protect both sides. So that's the main utility of the blockchain for us.
Excellent, thank you. All right, so now let's shift and talk a little bit about fundraising. And before we jump right into headwinds, tailwinds, what's working, what's not, I want to start with just level setting. So at the end of last year, I took a step back and kind of evaluated what was going on in the market. I think we lost $1.5 trillion in market cap in 2022 alone. This is token blockchain market cap. So $1.5 trillion, it's a lot to lose. Global blockchain funding had 3 straight quarters of declines from $9 billion, I think, in Q1 of 2020, Q4 of 2021, all the way to Q1 of 2023. So massive drop in the number of blockchain projects that were getting funded. As you guys think about the fundraising market, and you each have really unique perspectives, Adam has launched a while ago, has raised a Series B. NEAR, you're thinking about it from the grant perspective. You're about to raise your seed. What are the observations that you've had coming out of what was ultimately a challenging 2022, not just for the blockchain, but for the macro economy more broadly? I'll go ahead and start with you, Adam.
Sure. So you're saying challenges now as going forward in fundraising? Sorry.
As you reflect back on like the last year, and granted you haven't been in the market, but what do you think are kind of some of the headwinds and or tailwinds as people who are in the market?
Yeah, thank God I haven't been in the market. I have been deploying though, great time to be deploying. So headwinds, obviously the government's trying to destroy this space. I don't think they'll be successful, but they were successful in throwing a bunch of cold water on the space and scaring out a lot of smart investors and institutional money and sophisticated family offices who, prior to this nonsense campaign with Gensler and Co., these guys were ready to go. Another headwind, global macro, obviously just the whole venture space pulls back, interest rates are high, all risk on stuff fizzles down. Tailwinds, it's never been cheaper and easier to start a company, build a software company, build a MVP, AI, blah, 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 right? But it actually is really cheap to build this stuff now. And so you should get an MVP going before you ever think about raising, right? And go talk to 10 customers and make sure you're validated and have high potential NPSs and do willingness to pay studies. These are things that cost no money as a founder. And so do all that stuff before you raise, and then go raise $500,000 pre-seed and get the thing built and get 5 customers paying or doing whatever it is you want them to do. And so it's never been easier and cheaper to start a company.
That really resonates. I'd love to hear from you, especially as you think about the grant writing program. as somebody, I'm a general partner at Blockchange Ventures. We make seed and Series A investments, have made about 150 investments in the space. And when I talk to a lot of the layer ones that I invested in and the grant writing programs that they were launching and delivering on, I noticed that they were keen to get money wherever they could put it. Like they just wanted people building on top of their blockchains. Is that still what you're seeing at Near? How has it shifted as you're providing capital to these projects?
Yeah, I think, so I actually joined Near in September of this year, and I think one of the things, it was sort of at that moment when I think we were realizing the sort of realities of the market, and we were realizing that they were not going to be going away anytime soon, unfortunately. So we used to have, as you mentioned, a pretty robust grants program where, and I will say that, I think probably without a lot of due diligence, we were giving out money, and the whole goal was distribute capital, get people building, and actually it doesn't matter if most of them fail, right? Because they're trying and they're building something. I think given the market conditions, what we've, and then looking across at sort of like what has been successful for our founders and what hasn't, I think that actually did them a disservice to some extent. And so just as in the same way that I think we've seen a correction in terms of the VC space and overall funding space, we also made a correction at Near in terms of our grant funding. So now what we do instead of funding grants is actually really targeted outbound partnerships where we go out and we find really, really high quality founders, some later stage, some early stage, and are taking more of an equity-based approach. So we're actually sort of investing as if we were going to be participating in the upside of what these people are building. And then what we also have done, and the work that me and team are leading at Horizon is, the other thing we noticed is, we would give, a $50,000 grant, $100,000 grant, and no one would go to market, right? They would sort of be building, not sure what to do. And so that realization is like capital isn't everything, right? There's actually a lot that founders need from a support lens in terms of how do you think about go to market? How do you test your product, true product fundamentals, right? Iterate, test, put it out there. And that's really what we saw our founders struggling with, particularly ones that are technical founders, and haven't, and I think 80% of our portfolio are first-time founders, so don't have that experience. So that's kind of the shifts that we've seen. But I would say overall, I think the other thing that's interesting is I think there's a tremendous amount of optimism that we have in terms of the correction that's happened. I think Paul spoke about it earlier. We see actually amazing founders now who are building and committed in a way where 2 years ago I think the caliber of founder was a lot lower, and so that I think is making us really optimistic that the people that are building for the future. They're here to stay, and they're actually building things that have true value and utility to real people in the world.
Excellent, thank you. All right, Rebecca, you've got a really interesting role to play here because you're actually somebody who might be going to market in the very near future. And so I'm keen to learn from you, what do you see as kind of the opportunity as you're about to go to market, and what are some of the hurdles that you're aiming to overcome, and how do you navigate that?
So I think it's fair to say that Web3 suffered from a bit of hype, a little bit here and there, and I think proving utility, proving that you've got product market fit is becoming the center of every conversation. So the big challenge is, I've just come off just at the end of got a few of the cohort here actually on an accelerator program where we've been really kind of doubling down on our product market fit, our go-to-market, and the other job I've been doing alongside that is really testing out hypotheses with real customers. And happily, I'm getting that validation, and we've got some very good big enterprise global brands that have said this is what we need. So that gives me the confidence to then have that conversation with investors to say this is where we can take it. In terms of challenges, I guess it's a bit of a balance between that need for traction and proving that you're getting you're getting those right conversations going, but also that future vision for that non-linear growth, the big picture that you want to talk about, and the big vision really. So it's kind of get a balance between doing both in those conversations, but it's going well so far.
I love what you said about kind of enterprise adoption, and it occurs to me that I think when you're aiming to win over potentially institutional investors or venture capitalists who maybe aren't blockchain native, to the extent that you can identify customers that are enterprise grade customers at PepsiCo or Nike or Deloitte, how do we demonstrate that this has real utility to those types of folks, which may ultimately bring on fundraising? Adam, what's your experience navigating with big enterprise, and how do you win those kinds of customers over?
Yeah. So with BrainTrust, we actually started with enterprise customers. So everybody needs tech talent, whether you're, a small business somewhere or Google or Nestle, non-tech but big company. So we started with enterprise because that's where all the money is. You load up one of those accounts and it goes forever. You just expand. And then, so our value prop for BrainTrust was, we have the best talent and we'll match quickly and you're going to get the best price. And they'd say, yeah, sure, everybody says that. Like, I get spammed on LinkedIn 50 times a day. How is this true? So, well, we have the best talent because we have the best economics. We match fastest because we have the best tech of any talent marketplace. Cheapest, same thing, same as the best economics. And they're like, okay, how do you have the best economics? I said, well, when Deloitte or TopTal or whatever rents you a Java developer, they're marking it up 2x or 3x. We mark it up 10%. They're like, why? Why only 10%? So because we're not a company, we're a co-op essentially owned by our talent. And like, how do you do that? Well, we have this blockchain token. Like, never mind. You had me at 10%. So they don't give a shit about the tech, right? Like you don't care what tech your phone runs. You don't care what tech the Tesla has. You just care that it works. BrainTrust just works for enterprises. And so that's how we've got a foothold into about 160 of the Fortune 1000 use BrainTrust. Unfortunately, 3/4 of them are on hiring freeze right now, which is very aggravating. But they use BrainTrust and they keep the accounts keep expanding. And as soon as you explain to them how this is possible, they're like, okay, like I guess blockchain is good for something other than dogs and scams. So that's our story. We try not to talk about blockchain when we're selling. It's just it's a new business model, user owned, powered by new technology, blockchain tokens.
So really helpful. I kind of want to pivot and start thinking about it from the perspective of, I'm a builder in the space and I'm about to go to market. So this might really resonate with you, Rebecca. 3 of us on the stage actually invest directly in projects that are building. What are the things that you're looking for? What are your criteria for investment? Our fund at Blockchange is focused on new categories of business that could not exist without the utility of the blockchain. I'll dig more on that with you after this talk, but I really want to focus on our panel. What are the criteria for double downing if you're near foundation and you want to get them really embedded in the Near Horizon program? How do you differentiate the ones that are going to hit it out of the park from the others that you may deprioritize?
Yeah, it's such a great question and something that we think a lot about because so much of it, especially in the early stages, is really about the people who are building. It's about the team. It's about the vision that they have and their conviction that what they're doing is actually fundamentally disruptive and fundamentally they have to use blockchain in order to do it. I think that's the other thing that I think sometimes we see founders who are interested in the space, but they don't quite understand the unlocks of blockchain and how that actually can change your ability to monetize, can change your ability to have a community. And so we look for founders who I think really understand the near, in our ecosystem, the unlocks of the near specific tech and all of the different tooling. But I think more fundamentally than that, it's people who have a product mentality. And by that I mean they understand a customer need. They are particularly well situated to solve that customer need, and they've done validation about that idea, and they've done that before they go out and they raise money or they think they need to raise money. I think one of the challenges that I've seen in the Web3 space particularly is that there's this sense that raising VC capital is the end goal. And it's in fact a necessity sometimes to get to the end goal, but the end goal is to have a sustainable business that is profitable and that solves a real problem, right, for real people. And so that's the kind of founder that we're looking for. And of course, there's many ways that you can signal that, but the best way is that you actually have built something and it's being used by people.
I love that. And it's so interesting. I look at so many projects every day, and there's so many people who are not able to define the problem that they're solving for and be thoughtful about that. So I think that's a great one. Adam, what about you? You, I know, do a ton of angel investing. What are the things that draw you to a project?
For me, primarily it's founder market fit. So find a founder who is just maniacal about the problem they're solving and will run through walls and hopefully not break the law, or at least not get caught doing it. A couple examples, like Rahul Vora is the founder of Superhuman, the email client, who's just, the guy had sold a kind of a basic company to LinkedIn and was like all riled up about it, and just an obsessive engineer and an incredible product person. So I was one of the first checks into Superhuman. Parker Conrad, Zenefits, which was a tremendous explosion, but now Rippling, like, we got to work with him, and other founders who are just will do anything to win, basically, without hopefully going to jail. And then I wanted to tack on to what Laura said. San Francisco suffers from many things, but currently 2 rampant mind viruses. One is the more, as founders and CEOs, one is the more money I raise, the more successful I am, or the higher my status is. And then after that is the more head count I have, the more employees I have, the more prestigious I must be. And of course now we're learning like the opposite of both of those things is true. But if you can smell that, if you can like suss that out of a founder in the first meeting, like just easy, done. No need to speak any further.
It's really helpful. I'm going to go back to the first comment you made around founder market fit, because this is the industry in which you're working is something where there's incredible founder market fit. So would love for you to speak to that, but then also I want to layer back in this regulatory piece, because it's interesting to hear your voice from London. Andreessen Crypto just opened an office in London. They've given up on the US, maybe not entirely, but they've signaled that there's something really challenging about operating here. How do you think about it from London? Do you feel like you're well positioned from a fundraising perspective?
I mean, we're fundraising not just in the UK. I mean, we're speaking to American investors as well. So we have to tread carefully. We don't know how everything's going to pan out. We're open and being very honest about what the opportunities are and the risks. So we are going to market with a kind of, there's a Web 2 to Web 3 shift in terms of the problem we're solving. So we're not going in with, we're a crypto company, or, we're using the blockchain because of all its advantages, but we're not opening out as a crypto company.
Excellent. Okay, so last question. I'm going to ask each of you. I'm really interested to get to the next bull run, as many of you might be. And I've noticed in the past that each new wave of investors typically comes in when there's another proof point of the utility of the blockchain. So whether it was you could exchange digital currency, we saw high net worth individuals, family offices coming in, or some of the use cases in fintech and DeFi. We saw multifamily offices and maybe some early endowments starting to come in. What's the next, and this is a prediction, so feel free to be wrong and feel free to be creative. What's the next big kind of proof point that we need to see to get the next big wave of capital into the space, which I believe will ultimately catalyze the next bull run? Who would like to go first? All right, I'm going to pick on Adam.
Okay. Well, the last catalyst was wash trading NFTs. And so hopefully the next one is more productive and less scammy. This space has such a tarnish on it, and it is so well deserved. And I say this as someone who's been full-time here since 2016. We need blockchain tech to start doing what tech is supposed to do. That's making things cheaper and more efficient and disintermediating middlemen. That's what tech is supposed to do, right? Like, unfortunately, like SaaS companies can't generate $1 of free cash flow because they have so many damn employees and so much OpEx, and that shareholders are kind of left out to dry while the Silicon Valley bubble kind of takes all the profits. Like, blockchain tech can and will disintermediate that, and as soon as it starts showing structural deflation of prices of services and returning a lot of that value that middlemen extract back to the participants of the network, I think that will get serious investors involved again, and not just speculating over what's the latest exchange in the Bahamas going to do for us?
I'd agree with that, and I think it's being able to prove the cost efficiencies of it as well. I think once that's super clear structurally, but also the usability factor, that we'll have the mainstream adoption when it becomes easier. There's obviously the governance issue as well, but I don't know which one's going to be the tipping point first. But
yeah, I agree with all that. I mean, I think we're still so early actually from a tech standpoint, and so I think a couple of other factors that I think are going to lead to huge unlocks are continued interoperability between chains. So the ability to, again, I think you've made this point really well, which is you shouldn't actually have to think about the tech when you're using it. And right now you have to think way too much about where you are and how you get there and how you get out of it. And so I think continued interoperability, like we're seeing with the CCIP, is huge. I think there's going to be more of that, particularly in highly regulated fields like healthcare. And I think to double down on the usability aspect, it's connecting the back end so you don't need to know what's happening, and then it's about having a really, really user-friendly front end experience. And again, we are not there, but I think that's the call to action for all of us in this space: is how do you actually make products that are delightful, right? And that sort of live the promise of blockchain.
Great. So I think my mic might be off, so I'm not going to use it anymore. But I think that makes a lot of sense. I think it's an interesting time to deploy capital into the space. I think there are these proof points that we're looking for that will hopefully catalyze another bull run, but it is extremely exciting to think about deploying capital prior to that happening. So something to consider, and I want to thank my panelists for being here. I really appreciate your insights.